Two of my students, a couple with zero real estate experience, put $25,000 down on a 6-bedroom house, and it's generated over $50,000 in bookings in 4 months. And they didn't use their own cash for the renovation. They used 0% APR business credit cards. So their actual money out of pocket to control a cash flowing asset was $25,500. I'm going to break down exactly how they found this deal, how they funded it, and how they went from, we've never done this, to generating revenue in 4 months. But first, I need to explain why. They almost didn't do it because the thing that nearly stopped them is the same thing that's stopping most of you watching this right now. And at the end, I'll show you the exact criteria they used to pick this market over dozens of others. A simple checklist that anyone can use to find their first deal. That part alone is worth watching the whole video. So Chris and Flo came to me when they had a question I hear constantly. Should we do Airbnb arbitrage or should we actually buy a property? And I get why people ask this. Arbitrage sounds easier. You don't need a down payment. You need a lease, a place to furnish, and just list on Airbnb. Pocket the difference. But here's the problem. With arbitrage, you don't own anything. You don't get appreciation. You don't get leverage. You don't get tax advantages. You're basically building someone else's equity while hoping that the margins hold. And for someone who's trying to build real wealth, who's trying to actually get free, that's not a business. That's a job with extra steps. So Chris and Flo ran the numbers on both and they realized if they're going to do this, they're going to do it right. They decided to buy. But here's the thing that almost stopped them. They didn't want to figure it out alone. They didn't know how to list. They had capital, they had motivation. What they didn't have was a roadmap. So when they joined our program, what happened over the next 6 months is probably one of the best case studies I've come to see through. All right, let's get into the actual deal. So they found a 6-bedroom, 3-bath property in Toledo, Ohio. Now, Toledo, that's not exactly the first city you think of for Airbnb, right? But that's exactly the point. Nobody's competing there. The purchase prices are low and there's already steady demand from traveling professionals, medical workers, event workers, and regional tourists. They put down $25,500. And for the renovation and furnishing, they use 0% APR business credit cards, which means they didn't pay really a single dollar in interest on the setup costs. They spread the renovation costs over multiple credit cards, each with 12 to 18 months of zero interest, and the property started cash flowing before a single payment came due. From the day they started to the day their first guest checked in, 4 months live, and since launching in November 2025, they generated over $50,000 in bookings on a $25,000 investment. And look at this transformation. This is the before, this is the after. They took a dated, overlooked home and turned it into something guests actually want to stay in. That's not luck, that's execution. So why did this work? Because a lot of people buy properties and they don't work. What did Chris and Flo do differently? One, they didn't try to figure it out alone. They had a roadmap. They had a community of people who'd already done it. When they had questions at 11 p.m. about contractor bids or listing strategies, they had people to ask, not Google, not Reddit. Actual investors, actual human beings who've been through it. Two, they chose ownership over arbitrage, which means they're building equity. They're getting tax write-offs. They're getting appreciation. This isn't just pure cash flow. And I'm not hating on arbitrage because I do like it to an extent. I have some of my own. But this is wealth building and they own it. Nobody can take the lease away. Nobody can raise rent on them. Three, they were creative with financing. They asked for a bunch of seller credits and the 0% APR play is something most people don't think about. You open a business credit card with introductory 0% interest rates and you use those for furniture, supplies, renovation, materials. And you're essentially getting an interest-free loan to set up your property. And if your Airbnb starts cash flowing within a few months, which theirs did, the property pays off the cards before interest ever kicks in. And if you don't get to there, you do a cash out refi, you'll get tax write-offs, and you can use that money to actually help pay off those cards a little bit faster. That's not a hack, that's capital efficiency. And four, they move fast. 4 months from we've never done this to generating $50,000 in bookings. Most people spend 4 months thinking about whether they should just start. Chris and Flo spent 4 months doing it. And now they're looking for their second property. Okay, here's the part where I answer the things you're about to type in the comments. Yeah, but they probably had a bunch of money saved. $25,000, that was the down payment. If you're a high income earner making 6 figures, which is who I work with, that's achievable. That's not rich people money. That's I've been saving and I'm ready to deploy money. Toledo, really? That doesn't seem like an Airbnb market. Well, yeah, that's literally why it works. Everyone's fighting over Nashville, Austin, Miami. Nobody's looking in Toledo. Low purchase price, low competition, steady demand. That's the whole thesis of why this works. I don't have time for this. I work full time. Well, so do Chris and Flo. They work their regular jobs, own a business, and have kids. The setup takes effort. Yes, but once it's running, property manager handles the day-to-day. If you want to automate things yourself like they do, it's totally possible and that's what we teach. Smart locks handle check-in, pricing software handles rates. You built the system once and then it runs. And it probably sounds too good to be true, I'm sure. But let me read you what Flo actually said. For anyone entering Airbnb without knowledge, everything Jeff and the community taught was really valuable. The community was great. I can't imagine going through this alone. That's not me saying, that's her. And after doing it, after getting the results And I'm proud to say she is successful and my friend. Okay, I promised you the criteria they use to pick Toledo over every other market. This is the same framework I teach all of my students. Step 1, is there a demand driver within 30 minutes, not just tourism? Think medical centers, universities, corporate travel, regional events. Toledo has multiple demand sources, which means you're not dependent on one type of guest. Step 2, cash flow at 50%. Not the best case, not at summer peak, half full. If the deal only works when you're booked solid, it's kind of a bad deal. Chris and Flo's property cash flows at 50% right now, and that's why we said it's good to go. Anything above that's gravy, and go for it, but just make sure you're underwriting for the downside. Step 3, low purchase price and high bedroom count. A 6-bedroom under $300K means you can sleep large groups, families, sports teams, wedding parties, corporate retreats, and charge per night rates that a 2-bedroom can't touch. Step 4 are short-term rentals legally protected. Check your county regulations. You can use something like edge.co to find that out if you're lost. Check for recent proposals to restrict short-term rentals. If there's any political risk, just skip it. There's too many good markets for you to actually gamble on a shaky one. So they use 4 steps. That's how they found it. And that's how I teach everyone to find theirs. Here's what I want you to take from Chris and Flo's story. They didn't have experience. They didn't have real estate background. They've never managed a property. They were pharmacists like me, and they ran a pharmacy business. What they did have, though, was capital ready to deploy and the willingness to follow a system and the disciplines to execute in just 4 months. What most people spend 4 years talking about. I help high-income earners earn real money with real properties that generate real cash flow. And if you want what Chris and Flo got, the roadmap, the community, the accountability, there's a link below to actually book a call with my team too. Drop a comment down below. What's the one thing that's been stopping you from buying your first property? I'm really interested to hear, and maybe I can make a video on this a little bit later. I read every single comment. Thanks so much. Subscribe Monday, Wednesday, Saturday. Real numbers, real students, no guru nonsense. I'll see you in the next one.